Hello and welcome to another update video about Bitcoin. So we want to take a look at the current microstructure for Bitcoin. The price is approaching the Valentine's Day high, the 14th of February high located here around 98,800. I've been watching this level now for quite some time. We've been talking about this as a previous swing high for the last few days, and the price is indeed pushing higher. That was also the latest forecast, given that we saw a first 5-wave move to the upside from the Tuesday low. Only early yesterday I posted that update on our X profile. By the way, feel free to follow us here as well. You'll find the link in the description. This is something that is very important, I have to say, for me personally as well. If you have X, Twitter, formerly Twitter, then make sure you follow us here as well. Please only follow the correct account, the one with the golden check mark here. There are many scammers around, but why is it so important? Because look, something can always happen with one of our channels or whatever. It is important to stay in touch, so that's why we are on different platforms to decentralize a bit. So yeah, if you're interested, check it out. There are also additional updates and so on. But yeah, idea was that was yesterday. The price has formed a micro 5-wave move up. We were still at around 96k back then. Now we are approaching 100k again. So 5-wave move up from yesterday's low, suggesting a potential continuation higher. So that was the direction. But obviously I've been warning as well, and it's listed here as well, that due to the context, we've been in this range for quite some time. The microstructures have a high chance of failure. They're just not very, very reliable. That doesn't mean Elliott Wave doesn't work. It just means Elliott Wave is telling us we're currently in this context. We're in a range. We're in a larger corrective range, and therefore microstructures are just not reliable at the moment. But still, once we get a first 5-wave move up, we get a next setup. I mean, we already had a so-called 1-2 setup here with support between $93,640 and $95,470. The pullback unfolded. Price found support where it needed to just before it was going to break support. So just at that point, it was right there at the 78.6 retracement. So just like magic, it turned around exactly at that point. There was not previous structural support. No, it just turned around exactly at the Fib level, which is just a mathematical representation of market sentiment. Essentially, that is what it is, such a Fibonacci range, And often these levels are more like an area, okay? So it's not that the price, like here, needs to turn around exactly at the level, but it did that in this case. And often they do that, actually, right? But anyway, we've seen a reaction, and that is the first 5-wave move up from the low that we saw as a 1-2 setup. And then I shared with you, this looks actually like a 1-2-1-2, okay? Next step is a break above the Wednesday high. That happened, great. Retest, we wanted to, if you watched yesterday's videos, then you know that I highlighted to you that, we can keep the upside pressure alive as long as we're holding above this dashed line. And the price actually did hold above it. So that allowed us to just continue to focus on upside trend continuation. There wasn't even a fake out to the downside, which is good to see. So that would have been the first warning, right? While I'm telling you I'm not trusting this structure, it's not so much about trusting. Can't trust it until we get 5 up, 3 down, right? And the breakout above finally the Valentine's Day high at least. It's more like we can track it, and that is the yellow count is the primary count. So it's whenever people get bearish, obviously, then it can start to turn around. But for anybody who followed these videos here, you knew that we were here in an area where reward to risk for the bulls was in a very favorable, let's say, location or ratio rather. And you also know that the yellow count is and was still the preferred scenario. So we didn't really get bearish here, just bored. So finally, we see a little bit of action, but this is, again, what are we seeing here? We don't really see very aggressive upside price action, rather muted price action, but potentially impulsive. So in this impulsive move, and that's why I wanted it to hold above the wave 1 high, because a wave 4 and a wave 1, they can't they can't break into each other, right? So the wave 4 cannot break into the price region of the wave 1. So that was avoided, which is good to see. So yeah, I give the bulls here the benefit of the doubt still. No change there. And I think we are about to start a wave 4 pullback, the next pullback. I think there might be a rejection here. This is the Valentine's Day high at 98,800. At least there is a chance for a pullback. We won't know if that is going to act as resistance until we see a first reaction. But I should rather say this is potential resistance. And then what the price shouldn't do now is the price shouldn't break below the 50% retracement of the third wave. That level is, and I will remove the red line. We want to have the chart as clean as possible, right? So, by the way, we're also now in the blue target zone, so everything's coming together. And yeah, on top of that, we're now approaching the first ideal target of this third wave, which is the 138% extension at 98,700. So if the pullback starts from here, or some kind of a pullback, support is between the 23.6 Fib level and the 50% Fib level. We talk about 96,830 and 97,760. So only a break below 96,830 would indicate a top is in. And yeah, again, the last 4-5 pattern, this is often where it will where it can fail, right? So of this move up, of this direct move up, the high probability element of that rally is done. So we now talk about maybe another 4-5 pattern. But if you were trading this, then the third wave was the high probability element, or at least the element with the best reward to risk ratio. Now, yeah, we might get another 4-5, but I would not rely on the fifth wave. Especially now that we're approaching important resistance. Yeah, we've been below this level now since, yeah, you could say 7th of February, but even though we haven't really broken above this level on a sustained basis, well, we fell really below it for the first time here around the 4th of Feb. Yeah. Okay, actually here already, and then recovered. Okay. Yeah, so early Feb. Okay, so we need to get above this level. We'll see if there is a pullback. If there is one, ideally it would probably be from here around 98.7 to 99.3K. And I need one more higher high to really say that this is a 5-wave move up. When we get the 5 waves, I can give you support for the subsequent pullback again. That's the update about Bitcoin. Hope you liked the update. If you did, please hit the like button, leave a comment, and subscribe. And if you really like the content, then please check out the channel membership. Also, if you are interested in additional content, check out our main channel, MCO Global. You might not know yet that this channel exists. It's our main channel. We've got different communities in different countries, language areas, and this is the idea to bring them all together. We needed a central hub for our MCO communities, something that brings everything together, where we cover different asset classes, metals, cryptos, stocks, and where they get linked, where we also talk about geopolitical developments. And you'll find a link for this channel in the description. Yesterday I covered, or today actually, Tesla. Yesterday I covered Bitcoin, if I remember correctly. I talk about mindset stuff here. Interviews are planned. Guests will be analyzed. We will also do live trading at some point. Just need to understand what sort of the content is that you guys are interested in. So check it out. And yeah, hope you like the update. Thank you very much. Bye-bye.